Welcome back, folks. In this lecture, we are going to understand the IPDA price cycle. This is the algorithm that delivers the price action, and we are going to reveal this algorithm in today's lecture to the phases that deliver the price action and how to use them into our advantage and make them functional. So, without wasting a second, let's get into it. First of all, introduction to IPDA. IPDA stands for Interbank Price Delivery Algorithm. It is the algorithm that delivers the price using liquidity, gaps, and swings. IPDA is based on liquidity, human emotion, and logic based on the previous available data. IPDA is controlled by central banks and global GDPs. The IPDA completes its task to deliver price in four key phases. These phases are consolidation, expansion, retracement, and reversal. Now let's understand the phases of IPDA. First of all, we have consolidation. Everything starts with consolidation. The consolidation is the beginning of each and everything you're gonna study in this whole past series. Even if it is MD pattern, the market maker model, or any of your classic model in which Asian range or anything else works, you would always find that price is starting from consolidation and it ends toward the consolidation. So the consolidation is a trade range in which we find the multiple highs or lows. It can be a choppy little price action as well. Expansion is the move after the consolidation. This is very aggressive and it tends to deliver very perfectly. Expansion is aggressive most of the time, but it can be choppy sometime as well. But it will always be the second step after the consolidation. So we go to expansion from consolidation. In consolidation, our point of reference is the 50% key level, because that level can act as the resistance or the support for the price action. While in the expansion, our point of interest is the fair value gaps at the order blocks, because they might offer us opportunity to ride along or to wait for retracement. Coming to other retracement, the retracement is the third step. As always, everything starts with consolidation, then expansion, and then retracement. Now, the point of interest in the retracement is the low resistance liquidity that it leaves behind right before the draw on liquidity. So, in this example, we are bullish. So, there would be some high that price is targeting and it fails to take with this high. So, these are failure swings. Now, retracement is creating furthermore liquidity to attend in the next phase. This liquidity in the retracement is what we want to see as the confirmation that price want to go higher and do not reverse toward this consolidation lows. And our last phase is reversal. If the consolidation is the start, the reversal is the end. And here it is, the reversal. You see, everything starts with consolidation, and then we have the expansion phase in which price leaves some gaps behind and the order blocks that we fill in with this right here, this leg. You see, the retracement leg, which leaves the failure swings and further liquidity right before the draw on liquidity, which is higher. And then reversal is very aggressive price movement after we hit the higher time frame key level right before the consolidation. Now, there's a catch. You might have noticed this portion right here. What is this? This portion right here is a classic market maker buy model. But if you focus on this section, this is a market maker sell model. So when we talk about the IPDA price cycle, it covers the market maker sell model and market maker buy model as well. If you have been with me for the long enough, you have seen me saying it a lot of times that every retracement to reversal is a market maker model. But here's a twist. Every expansion The retracement is also a market maker model. A lot of time when you are trading, you have seen that market maker models reverse right before taking a consolidation. You know what that is? That's right here. You see this price movement. That's how we know that price has a drawn liquidity right before here. Once again, every retracement to reversal is a market maker model, and every expansion to retracement is also a market maker model which is expected to be not completed and do not take the original consolidation and reverse right from the original consolidation. That's how this IPDA works. IPDA covers everything that happens in the market. Our very first phase is consolidation, which is a tight price range having multiple highs and lows, or a choppy price action. Then we have expansion. Price will always go from consolidation to expansion. From expansion, price can go toward two things, either retracement or reversal. If it goes to retracement, we are going to see two models, a sell model and a buy model. We can sell from right here toward this low, or buy right from here toward this high. And then we have retracement. The point of interest of retracement is the low resistance liquidity will leave behind the failure swings and the frontline liquidity. And inside the reversal, we get the opportunity. We hit the order blocks, fill in the fair value gap, and this time period when the reversal happens is very significant. It would be inside the kill zone, most likely the silver bullets, and then we look for the entries right here to other drawn liquidity. Price can go from expansion to retracement or expansion to reversal. For this one, let's look for the examples. Right here, this is gold chart, and you can see a very beautiful example. Everything starts with consolidation. You can see right here, this is consolidation. After that, price goes higher. Right here, expansion. And you can see right here, we have this fair value gap, these order blocks that price left after the expansion. As I told you, the reference points of expansion is the order blocks right here and the gaps, which price is most likely to fill in the retracement phase or in the reversal phase. In the retracement phase, we look for the low resistance liquidity. You see these failure swings? 1, 2, 3, 4, 5, 6, almost 7 swings, along with strong liquidity. Right here. Inside the retracement, price can offer us opportunity, but we tend to wait until the reversal phase inside a kill zone or some kind of key level. You see right here, price offers us entry inside the reversal with this huge liquidity sweep, and then it goes higher. Consolidation, expansion, retracement, and reversal. Price will always repeat these things. It is always in one of these phases. It does nothing other than these four things. It's always doing one of these. Right here, some more analysis. We have taken the sell side liquidity. It's the higher time frame key level. Right here, real support. For our fair value gap, we did the market structure shift. Price gave us nice opportunity along with this order block, fair value gap, and then it shoots higher towards this bullish strong liquidity. You see, you can't use this IPDA on its own. You have to add the analysis factor and the confirmation factor like SMT or high resistance liquidity one, turtle soup, something like that. That will confirm you the idea of this consolidation, expansion, retracement, and reversal. Then you can ride any of these phases and make the fortunate. Right here, you see how price offers us the opportunities. Everything is aligned. Everything is just perfect. Consolidation gives the support to the retracement and the reason for expansion. And then reversal offers us entries right here, here, and here. If you put your SL right here, you can go long and you can take mighty 5 to 6 hour. Our next example, this is GBPUSD forward chart, November to December movement, and this was very aggressive price movement as well. And you can see right here, we have very amazing sample right here. What is this? Up, down, up, down. It's a restricted price range, which we call consolidation. And then we have an aggressive price leg out of this consolidation from its 50% level. What did I say? The 50% level of the consolidation is our point of interest and it's going to be acting as resistance or support. So here it is, the example. You see right here, that's our entry on 5-minute chart. A very amazing entry after this market structure shift. If you don't believe me, go into chart and you would see it. This is GBPUSD forward. This is the expansion leg, and then we have retracement. Retracement is leaving amazing value swings right before the strong liquidity. So this is also confirmed, and then we have reversal right here and amazing legs. Wow, this is very beautiful. Here's what actually was happening. We are right here inside this weekly bearish mitigation block, which is a real resistance level, and we have taken enough buy sell liquidity as well. So price is most likely to reverse from this level after this consolidation toward the strong liquidity, which is sell side. After buy side, we target the sell side if we hit the higher time frame key level, which is bearish. And you can see, if you want to enter, you could have entered from this level or from this level right here. You see, these are amazing opportunities right here. Our next example, this is USDJPY 30-minute chart. This is 7 to 12 February 2025. You can see right here we have this consolidation, low, high, low, high, low, high, a restricted price range, and here's the 50% level. You see price offered us nice entry right here. If you go on 5-minute chart, it's a very amazing entry. And then it expands higher, takes off this high with a wick, but fails to take this high, creating a liquidity, low resistance liquidity. These are relative equal highs, so it's a low resistance liquidity. And the retracement creates further liquidity right here. You see, it takes this low right here and fills the gaps. There are a lot of gaps on 15-minute chart. Let me add some analysis right here. We are going from weekly inversion to buy side target. We have taken the sell side with this wick right here to this buy side liquidity. But if you focus, we are expecting this breaker block and price is going higher after taking the liquidity below this low right here. It offers us entry here, and till it reaches the drawn liquidity. We could have entered from here, this zone or this zone. That's how this works. If you know the IPDA key phases and you have very strong grip on it, you can always expect another phase coming up. If you are looking at consolidation, you know that consolidation always end up in the expansion. You just have to know the higher time frame market direction. From here, we knew that price is going to go higher. How? This weekly inversion fair value gap. It told us that price will go higher. If my account is investor and I have the margin that I require for this type of trades, I can trade this without hassle because I know price is going to expand higher. I can bear this movement. This is retracement, easy. After expansion, we have retracement. But if we have reversal, then I might worry and take something off along this level. But anyways, I'm not closing the trade. I might take it down to the break-even, but I'm not closing it unless I see very strong reaction or some high resistance liquidity run These phases works every single day. If you know what price is doing, you can always expect the other phase. And you can do it over and over again. It repeats. You just have to add a little analysis, a little faith, and a little hard work, and you will have it. It was all about this video. I hope you enjoyed it. Hope you learned something from it. Stay sharp, stay safe.